concise approach to top-down market strategies and the forces affecting investments. That's the spoken word on investing.
We are going to get the spoken word now on HMOs from our Chief Equity Strategist, John Blank, who's sitting right here next to me this time around. It's weird having you sitting right here next to me. You say that they're burning hot this summer, HMOs are.
This is true.
Why?
The Obamacare Act got affirmed by the Supreme Court, and John Roberts himself led the opinions to the pro, and that gave a very clear message that Obamacare is here to stay, which means 15 to 20 million newly insured, uninsured people are guaranteed to have an insurance policy, and they're getting them from these HMOs.
Okay. And secondly, you say all HMOs are in play for some kind of tie-up. What does that mean?
Well, what we're seeing, Terry, is the big HMOs, the United Healthcares, the Anthems, the Humanas, the Cignas of the world are big, but they are facing down the value chain hospital chains that are getting more big. So they're trying to look to squeeze costs under the Affordable Care Act, and they're looking to the insurance companies to provide it. So the insurance companies are then looking for a way to save costs elsewhere, so they're looking to merge. And so the pushback from this accordion is you have 5 major HMOs that are driving the bulk of the insurance business in the United States for healthcare. That's an oligopoly in its own right. So if you take an Anthem or a Humana and put it in with an Aetna or a Cigna, you go from 5 to 3 or 5 to 4. I don't think the government is going to let it happen. But the market is getting priced up and the earnings are getting ramped up. And we see that in the Zacks ranks of this industry. 10 of 13 in this industry have been Zacks number 1 or 2 ranks the last 2 weeks. So what we're seeing here is excitement, enthusiasm, and probably a little froth because some of these mergers are not going to get approved.
So maybe good for investors, maybe not so good for consumers.
I would think, you know, from an investor perspective, the issue you have is whether the story has been bought already, and therefore the prices are high. I think this is an industry where you may want to wait for a pullback in the healthcare stocks like this because there's clearly been a lot of momentum runs. And so I think as a stock investor, caution towards these Zacks rank stocks. When you see a pullback, then you've got a story and a catalyst that might take them up again. But wait for that pullback.
And on the revenue side, you say private Medicare and Medicaid HMO plans have grown as well.
Absolutely. What we're seeing, Terry, is this is Obamacare, Medicare and Medicaid. That's the government plans. And so some of these industries, some of these insurers have a more defined focus on the Medicare and Medicaid plans, and those are the ones that are seeing the most pressure from the costs. And one of the things you want to learn when you look into these stocks is how much of a breadth of insurer coverage they have, and get yourself thinking through who the right players are. So some of these groups that are in different regions that have stronger incomes, higher incomes, less uninsured people might be better plays. So
you're looking for more merger activity in this group?
I think you're going to hear more merger announcements, but I don't actually think you're going to see mergers that approve. They're just not going to get approved.
All right, so let's go through a couple of HMO companies that are on your radar. Anthem being one of them.
Anthem is one of the smaller of the 5. Anthem, ticker ANTM, is in play for a merger. It's been a Zacks ranked #1 stock for quite some time, and again, you're looking at a 10% annual earnings growth rate for this industry, which when you're talking about 2% for the economy, that's very strong. And again, pricing is not too far out of line. If you get a pullback, this is a stock you want to look at.
And Aetna's another one.
Aetna's bigger, ticker AET, than Anthem. They're going to be the acquirer. Typically on these mergers, you want to play the little guy who gets bought because those stocks go up because that's the merger premium. So if you're looking to be a merger play, Anthem's the one. If you're looking to be in the cost, you know, driver down, big company, own the major player. The benefit of these types of companies, the Aetnas, is they don't get shorted. They're too big, they're large cap, there's too much volume for the stock. They're not likely to have that shorted small cap issue and get pulled back and really volatile. So if you're looking for a very low defensive, you know, but still 10% annual growth for Aetna, and you get a pullback, that's a good stock.
All right, thanks, John. There you have the spoken word on HMOs for the summer of 2015 with John Blank. I'm Terry Ruffalo.